Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the third week of July 2021. And let's kick off with the Euro. And it's been drifting lower through the week. Started off with Monday pushing up towards the 50-pip retracement of this swing move down. There's this swing move down here. And after hitting the 50-pip retracement, it has fallen back to just below the lows of the previous week, although it tried to recover somewhat, but continue to drift lower towards the 118 support level. And this was triggered weaker on Tuesday with a better than expected US CPI figure. And this led to all the major currencies to fall against the US dollar. So now this is a very key support level now, and it could consolidate initially for the start of next week, but there is some bias towards the downside where it could come back to retest this 38-pip retracement level again. The previous key long-term swing was at the 50-pip retracement. That's near the highs for the year. So it could start to drift lower, heading towards 117.36 area. Right, so this resistance now is moved lower. Key resistance will now be at the 119. It has not been able to break higher above that since the start of July, since the start of this month, and already starting to drift lower. The monthly pivot is way up higher at just below 120 at 119.85, and it has been weakening through first couple of weeks of the month. And it has also fallen lower below the last week's weekly pivot. So this level here of support, we'll need to move it down to this zone. And this fib will be a key support zone here. Just to remind everyone, if we go back a few years, back to the highs of 2014 to the lows of 2016, that's the swing move lower. And that's the retracement to the 38 fib, and 50 fib was hit earlier this year. Now it's drifting back down towards the 38 fib level. All right. It is also sitting on a critical trend line as well. If we draw a trend line from last year through this point here, and it is now also just hitting that trend line for looking for support That's where it bounced back up on Wednesday. We'll see if this holds for the week and whether it's going to drop below that for next week. If it does, then it's targeting the 117 again at this swing low. Although the critical fib retracement is here, but the swing low here is at below that, near the 117 level. All right, so this is a very key support zone. And of course, a very critical support zone at the 117 plus multiple fibs as well. Let's mark this first. If we flip this over for a continuation move lower, then that's also targeting that same level, which is also a swing low of, at the swing low is at 117.04. Move this to the low of last week. So the 138 extension is going to be at 116.95. Okay. Let's also take a look at the US dollar index, DXY, and see how it has moved for the weekend. You can see this strong move up towards back to the swing high again. That's on a Tuesday with the better expected CPI figure. Pull back on the Wednesday and then drift back up higher. So this is definitely a critical resistance level. And that swing high is at the 92.78 area. And it's still within the bullish channel. And like I mentioned last week, it's also in with a higher, a smaller channel within the bigger channel here. And it's threatening to break out higher above this potential ascending triangle. And we'll see if it's going to break next week. All right, there's also no critical news events for the US, so it's all technical analysis based. Let's move back to the euro, and there's a key ECB meeting next Thursday. And we'll see if there's any change in their monetary policy or whether there's going to be any talk of tapering again. That's going to be a key one on Thursday, and minor news on Friday with the flash PMIs. Okay, let's move on to the cable. And the cable has been ranging between 138 and 139 for quite a while now, and it did try to drift up higher and could not break the 139. Did try again. It has already attempted to break above it 6 times, and already 4 times last week out of the 5 days. And eventually on Friday, it has fallen through the support at 138. So that's a critical break here. Let's see if this is going to be turned to resistance here. Let's move this resistance away from the monthly pivot. So like the euro, it has also started to drift lower. And let's mark this down as resistance now. And this opens up a path towards the 137, where below that there's the daily 200 EMA sitting right next to the 50-pip retracement of this bigger swing move up. It's coming back to 50-pip retracement area and the daily 200 EMA as well. It has pulled back to the 50-pip twice before with a double bottom and climb up to test the swing high. And then after settling around the 38-pip retracement, it has now started to drift lower and targeting the 137 and the 50-pip retracement. All right. So this is a critical break here, and it could be bearish momentum down towards this key support level. And next week, there's only minor news with retail sales and the flash PMIs as well. So there could be further bearish momentum to follow through. If we take a look at the weekly time frame, that shows a bearish move down, and it has not break the lows of the couple of weeks yet, but let's draw this support. Is sitting right at that support level now. So it'll be a matter of time where it's going to break that trend line. And the UK has been fairly bullish, and although could not break higher above the 139 as the economy is opening up with next Monday, the opening up of lifting of all restrictions as the vaccination rates has gone up significantly for the UK, and the country is fairly bullish in their economy. So we'll see how this reacts at this trend line at the start of that Monday, the so-called Freedom Day. So there could be a big push back up. We'll see. We have to see how far it can recover. If not, then it's likely only after it hits the 137 and the 50-pip area at 136.85, where there could be a recovery and a bounce. Okay, let's move on to the Aussie dollar, where it has already weakened over the last couple of days of the week down to the support level at 0.74. So the Aussie dollar is already moving ahead and falling first towards the support zone of these three pairs, and it did test the 0.75 and it has not been able to break above that since the middle of last week, and has fallen below and avoiding the 0.74 until Friday. So that's was a matter of time where this support would break. Okay, and this reversal move, that's also right at the 138 fib retracement, right at the support zone, just below 0.74. The next level, next extension at 162 is just above the 0.7300 figure, and that's at 0.7310. So that will be the next potential support zone. Okay. We take a look at the weekly time frame. You can see that's after the previous week's spinning top, and this was the break below the 55 EMA, and it's going to target the weekly 200 EMA at 73.38 before it tries to target the 0.73. And this Tuesday, there's the RBA monetary policy meeting minutes that's going to be released. And we'll see if there's any changes there. And then minor news on the rest of the week with retail sales and the flash PMIs as well. All right. So we'll see if the US dollar is able to break that key resistance level. And if it does, then that's going to trigger further bearish moves in these three pairs, and potentially spot gold as well. We'll see how these pairs react for next week and whether the bearish momentum will continue. Okay, so do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.